Good morning, everybody. Hey, welcome to the 24th of April. Hope you're having a great week as we head into our next to last day of the week of trading. We did have two up days in a row. Question is, can we have a third? That would be nice, wouldn't it? And so we will talk about that and more when Dave joins us here in just a few seconds. Hey, before we get going, let's not forget that in the world we live in, there are a lot of things that are out of your control and my control. However, I want you to know you can take control of your investment portfolio by knowing the amount of risk you have and making sure that it really and truly lines up with the amount of risk you should have in your current portfolio. Give us a call at 863 382 0037 to schedule your core retirement analysis.
105.7 Light FM. Hi there. We're at 8:42 here, 19 before 9. Advisory services offered through Second Half Financial Partners, LLC, an SEC-registered investment advisor. The opinions voiced and information provided in this material are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual. To determine which investments are appropriate for you, please consult with a financial advisor. Second Half Financial Partners, LLC does not provide tax or legal advice. Please consult your tax or legal advisor regarding your particular situation. And it's time to check in and see what actually is happening to your money today. Kind of a good day yesterday, but it could have been so much better. Let's check in with Phillip Statler from Statler Financial Service and get his take on things. Phillip, good morning. How you doing today?
Hey, good morning, Dave. Doing well today as we managed to put two pretty good days back to back. And the question is, can we make it three in a row?
Well, we got a couple of reports that actually seemed like they buoyed things up a little bit, so there's a possibility. Tail of the tape from yesterday. Yeah, you're right. It was a good day. The Dow was up a full 1%, 419 points. S&P was up 1.67%, up 88 points. And the NASDAQ was up 2.5%, up almost 408 points yesterday. But boy, oh boy, after 10 a.m., things just kind of went south. And the biggest blame for it seems to be going to the inscrutable Chinese. I know that's a stereotype, but they are smart over there. And the Chinese government said, we don't know what the heck Trump's talking about. We aren't even starting negotiations yet. We haven't been talking to those birds. And all of a sudden, that euphoria we had over the possibility of the tariff situation getting settled just kind of quieted down all at once, didn't it?
Yeah, China calls it fake news.
Gosh, they're borrowing our terms now. What are we going to do about these guys? One more thing they stole. The rumblings had been out that the tariffs weren't going to last forever, which we still don't expect them to. But Besant, the Treasury Secretary, had said, yeah, we got low-level chats going on with China, and it looks like we might be able to come to a meeting of the minds. And then China said, we don't know what the Sam Hill they're talking about, and the wind kind of went out of our sails. We fell, let's see, in the Dow. I haven't looked at it yet. Let's see, yeah, we were down about 800 points in the Dow after that little announcement. It was not what the market wanted to hear, was it?
No, it definitely was not. They wanted to hear the opposite, that we were on the mend and we were going to make some progress and actually start to have some true talks with China that might take the tariffs away.
And you got to remember there's strategy involved on both sides. We say, yeah, we're swapping ideas and whatnot on a low-level basis. It's not in the Chinese government's interest to see our markets roar back and have us all optimistic and healthy, because all that does is that buys the administration time to play a little bit more hardball in terms of the negotiations if they're going on. So, yeah, you really can't believe 100% of what they say or what we say when we're in a situation like that.
No, you can't. Let's face it, Dave. I mean, we both need each other. I think that probably in the world we live in, China probably needs us buying their goods more than we need them, because we don't export I mean, we export some to them, don't get me wrong, but there's an imbalance of trade there, and that's what's got this whole thing going. And so I think that it's going to be it hurts China more than it's hurting us. They may not want us to believe that, but I got to think that it really does hurt their economy.
I believe so. But in terms of perspective, two things. Step number one, we are the third biggest trader with the Chinese. The South Asian markets are actually bigger than we are, but still, if you lose your third biggest trading partner, it's not exactly good news. The other side of the fence is it does help to keep in mind, though, that the Chinese economy has been kind of on the ropes now for a couple, 3 years, and for all of the patter we've got about how our economy isn't as good as it should be, we're coming at it from a much stronger economic starting point and can endure a few kicks in the privates a lot better than China can at this point. So there's a couple, three reasons why China has a better incentive to negotiate this thing away than we do over the short term.
That's right. And you just from an economic standpoint, you're right. It's one of those things that we should be, they should be wanting to come to the table, but it's all about show, right? They don't want to show any weakness to their population, and so I think that's probably the big deal right now.
Yeah, on one good press release, they can show the fact that they can do some damage to us as well, which they obviously helped doing yesterday. Other stuff that contributed to the fact that the market kind of ran out of steam came from the Beige Book. The Federal Reserve released it, and it showed that U.S. economic output fell to like a 16-month low among all the uncertainty over tariffs. So the Beige Book didn't give us any good news. Thank heavens it was offset by some pretty good housing news yesterday morning, wasn't it?
It was, Dave. Housing starts, or new home sales rather, came in at 10 yesterday morning and way better than expected. I mean, the expectation was 685,000. Actually, new home sales was 724,000 for the month of March. So that was really good news, and it was up substantially from the 674,000 that was February number. So if we can just build on that and continue, though I did see yesterday, we didn't talk about it, but mortgage applications were 13% down from where they had been the week before.
A little creeping up in the mortgage rates probably didn't help that a bit. We kind of got a confirmation of if it may be just fast buying in order to beat the tariffs, but it's still good news. Our durable goods orders just absolutely slayed what anybody expected by a margin of like 9-1 over what anybody expected. So we got some good news to start this morning too, didn't we?
We did, Dave. The expectation was 1.6%, which was way better than what it was in the prior month, but it actually well surpassed that at that 9.2% increase in durable good orders. And you're right, it's probably tariff based. But I got to think that you ordering today still may not beat the tariff, right? Because when it hits the port, if the tariff's in place, you're going to pay it. And so, sometimes it takes a long time for stuff to get here.
Absolutely. Depending upon what you're ordering and who you're ordering from, it could be a substantially bigger price than you originally ordered. I should make note that the durable goods orders, once you factored out defense spending, were even a bigger margin over there, 0.8% expected. We ended up going up by 10.4%, so it wasn't all government orders replacing the junk we blew up in the Ukraine either.
No, it wasn't. So that was, to me, that was some good news. Now, if we can carry that forward to next month, that'll even be better news.
We'll take that without a complaint whatsoever. It is earnings week going on, and yet we mentioned at the beginning of the week, it's something like 60% of the Standard & Poor's 500 capitalization is reporting this week, so there's a lot of stuff going on. And you're starting me out with some not such good news. Our dear friends at Comcast are losing subscribers. What a shock.
Yeah. Could be because of issues I had like yesterday with the internet, right?
I was kind of alluding to that.
So they had a pretty huge decline in subscribers last quarter. They lost 199,000 domestic broadband customers. And then you put on top of that, they lost 427,000 cable TV customers. That's a massive exodus from Comcast.
Honestly, I was going to say that cable TV customer base, that's becoming more challenging with the onset of streaming. But actually, the number of broadband customers lost was actually kind of scary because you got to keep in mind, Comcast is a big chunk of the internet's backbone. They can do it.
That's right. They can, but what this is showing is there's more competition coming into the to that realm. And so, we're kind of hunkered down here. We don't have the luxury of other areas where we got more than one provider. We're basically stuck with one. And so, we don't know that feeling of having some choice there, but that's the way it is for them. And they, I think their revenue. I mean, they actually did okay for the quarter, even though they lost a lot of subscribers. They came in at $1.09 versus 98 cents a share, and they beat on revenue as well. So, they're getting hammered today because of the loss of subscribers, and forward looking, that's going to affect revenue. They're trading down 6.2% this morning.
Absolutely. They've got all kinds of stuff going on with them that gives at least cause for concern. Among other things, spinning off all of those cable channels that they own as part of the NBC deal. They're a company to watch at the moment, and if they're actually losing home subscriber internet, that's not good news for the company.
No, it's definitely not. And so, and like you said, there's a lot of companies reporting today.
Mm-hmm.
I got another one that's not doing quite as well this morning either. That's PepsiCo. Um,
Oops.
yeah, they missed on earnings by a penny a share. I think revenue was lower than expected as well, and so they're suffering. They're down about 4/10, almost a 0.5% this morning before we get traded.
Not good news. Got any good news this morning?
There is some. Just let me scroll down here and see what I can find here.
I need to smile
Texas,
here somewhere.
Texas Instruments, a name we don't talk about a lot anymore. Back in the day, they were, a go-to for electronics. Better than expected guidance and earnings for this last quarter. They came in at $1.28 versus $1.07 expected. Revenue was well ahead as well. And they gave some upbeat guidance numbers for the current quarter. So it's a big winner right now, up 9.75%.
TI might have made the smart decision after they stopped being the trendy high-tech company. Now they're going back to making the more boring integrated circuits that people use all the time, but you don't hear the press over. They don't get into the hot stuff that they get the pants beat off by NVIDIA anymore.
That's right. We got another name that you and I talk about all the time, Hasbro, toy maker.
Ooh.
They reported. Get this, Dave. It's kind of unusual though. They beat on earnings and revenue substantially. They came in at $1.04 versus 67 cents expected, and revenue was over 100 million more than expected as well. Now they said they're not changing their full year guidance because there's still some uncertainty with tariffs, but they're up 7.25% this morning.
Cool. We always watch that in Mattel because it seems to be a zero-sum game in the big-name toy games. I can't wait until I hear what Mattel says now.
Yeah. So on the other side, I have a couple more losers for you. Sorry.
Ooh.
Chipotle, fast food, chain. They, they disclosed their first same store sales numbers dropped the first time since 2020. They did miss on revenue, and they came in at 29 cents, which is only a penny ahead of expectations. So they're trading down about 1.2% this morning.
One of my tip sheets was saying that's the first decline in in-store traffic Chipotle's had since the end of the pandemic.
Yeah. Yeah. I mean, since the start of the pandemic, 2020 was the first time that they had a sales drop. So yeah, big change there for them. Southwest Airlines, real quick.
There we go. I was going to say, let's do one more. Yeah.
They came in well on their quarterly estimates, but they came in and also said that they are going to cut capacity in the second half of the year. And so that's got them trading down about 3.5% this morning.
That couldn't mean wider seats or anything, could it?
I'm afraid not.
Nah. Not a prayer. A lot of high-tech companies are going to be reporting later on today and after the close, so we're going to have a real floodgate tomorrow morning. Resetting the table, it was an up day yesterday on Wall Street that kind of trailed off toward the end, 45 minutes before we opened this morning. Are we looking at any good news, Phillip?
We do have a little bit of good news, but it's not in the Dow and it's not in the S&P 500 right now. The Dow is down a third of a percent. S&P 500's just a tinge of red right now, not even a tenth of a percent, $3.20. But the Nasdaq 100 is in the green right now, about between a tenth and two tenths of a percent. On the other side of the coin, we got silver taking a retreat this morning, down about a half a percent. Gold, on the other hand, is jumping up substantially, up almost 1.8% this morning at $3,353 an ounce. And then crude oil is heading back up as well this morning, Dave, almost at 1.5%, $63.16 a barrel right now.
Weren't we about there, though, yesterday morning? I think we were about 63 and change yesterday as well.
We were.
Day by day, we're doing okay, I guess. Overseas markets, the Asian rim was kind of weird. Almost everybody was up except the Shanghai market. The Shenzhen Chinese index. It was off by 0.6%. They must not have been any more impressed than our markets were by that statement out of the government about tariff negotiations. Europe is kind of all over the place. I got the Italian markets way up. I've got the German markets being off by a little bit. On balance, the European markets are just slightly on the green side of the zero mark this morning, halfway through their trading day over on that side of the pond. Getting my retirement together so that I can count on a retirement happening, that I can afford to do it, that takes some planning. Help me plan it out. How do I find you?
Dave, that's why I developed the core retirement design to help people design the retirement they always dreamed of. Give us a call at 863-382-0037 to schedule your core retirement analysis. And then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk, 7:30 a.m. and 95.3 FM.
And back here tomorrow morning with a whole other slew of reports and economic events. We can't even guess what they're going to be as the day progresses, right?
That's right, man. Have a great day.
Thank you. It's 105.7 Light FM's and Statler Financial Services, Phillip Statler. Surprise!
Hey, folks, again, I want to thank you for joining us. Have a great day. I look forward to speaking to you again tomorrow. Bye now.